Heidi ho, everyone, and welcome aboard. It is weekly Sunday market update, and I'm glad you can join us for this trip around the world and to have an insight into what our traders are thinking on this Sunday as we head into the week that is up before us. Last week, of course, we had three central banks strutting their stuff and raising interest rates, and that appears to be the general consensus around the central bankers of the world that needs to happen to curb this beast of inflation that seems to be getting out of control. And it'll be interesting to see exactly what's going on in terms of the fundamentals as we come into the week ahead. First up, we're going to go to Alexis to talk on that exact subject. And as we do that, let me share screen with you and take you straight to Alexis. Hi, Alexis. How are we doing?
Right. Hi, everyone. Sorry I couldn't be in live. Here is today's fundamental analysis for the upcoming week. Now, as you know, I always like to look at the tradingeconomics.com website. I've got a short summary over here. All right, so these are the kind of figures that we're looking at, right? And again, the way I trade fundamentals at least is, to take the difference between the strongest versus the weakest economies, right? So what I'm trying to identify is the economies that have decent statistics holding up pretty well, and comparing it against the statistics that are not as healthy, not as good, so it's like the weakest versus the strongest, and that is what I'm looking to kind of trade each other on, right, or offset the pair. So over here, this is just based on the latest numbers, and bearing in mind that GDP is a lagging indicator, right? But overall, if we just take a kind of an overlook on it, what kind of interests me is that New Zealand's GDP, it's the latest quarterly GDP is still at 3%. Inflation rate 6.9% is high, but comparatively to the US, the UK and the Euro, I think it is, I would say, in a manageable area right now. So interest rates has already been raised to 1.5% in an attempt to combat this inflation rate. Right, and the jobless numbers are pretty healthy as well. So it has one of the lower, unemployment rates, and unemployment, is a proxy that we use to kind of forward guess the upcoming GDP in a sense, right? And then what I'm going to compare it against is the euro. Very weak numbers, partly because of the situation happening in Russia, Ukraine. All right, interest rates still kept at zero, inflation really high, and unemployment is really high as well. So another thing that I look at before I actually want to take the trade is what is happening on the other across the board in terms of their monetary policy. So in New Zealand over here, you can see large-scale asset purchases. Now this is updated in end of March, right? About a month plus ago. So the New Zealand side has already said that they will be downsizing the large-scale asset purchases portfolio. In a way, it is to make it brief, it's a bit like quantitative tightening. They will not be buying. You can see here that they will not be buying any more new, large-scale assets, and they're not reinvesting the proceeds, all right, over here. So this starts to be a little bit interesting because we want to see what each economy is kind of doing to kind of combat the high inflation. So this is a indicative large-scale asset purchase date, right? So what the one has just passed, April 60, 50. I don't think they really did make this amount. I have to go check. But upcoming in May, this 2024, 27. So you can see April 2025, April 2029. These are their plans to kind of schedule a so-called weekly purchase of bonds. But from how the March statement has come out, right, I think they're going to kind of hold back or really reduce their large scale, downsizing the large scale asset purchases. And this is really happening across the board, right? So we have Australia doing the same thing. All right, you can see also here, this was written, I think, updated pretty recently in, I think, February, March as well. So you can see the RBA, all right, bond purchases will end after February 2022. All right, so they are also stopping the large-scale asset purchases. And same thing across the board. I think the Federal Reserve as well. This is the US, right? The Federal Reserve. So they have plans for reducing the size of Federal Reserve's balance sheet. So this happened since I think February and March. A lot of economists are already trying to figure out how to combat the high inflation. So we have a few of the larger economies doing it. Even the EU is also doing it as well. All right, this is an article. Okay, you can see that it says here, ECB. This article is written, I think, mid-April, confirms the end of its bond buying in the third quarter as inflation surges. So we are in an area where I think a lot of the economies are trying to figure out how to combat this inflation issue. All right, 6.9, 5.1. So what's going to be interesting is in the next inflation numbers that comes in, we want to see, I would like to look and see who is actually successful just by reducing their large-scale asset purchases. Are they able to push down inflation by any amount in that sense? All right. So the currency pair that I will want to look at is actually the Euro Kiwi. All right, the Euro Kiwi now. The Euro Kiwi, for those of you who have been trading with me in, I think, last March to the month of March to April, we were actually short on the euro, and then it reached an all-time low in a sense, the period of like consolidation. So let me just shift this in. Okay, so let me just let me remove this. Okay, more space. All right, so this is a weekly time frame of the euro currency index. I want to go and look at the Euro Kiwi. Okay, and Euro Kiwi, it's over here. All right, so the Euro Kiwi, this is a weekly time frame. I mean, I don't normally use Fibonacci retracements, but it's just interesting that price has retraced is sitting just above the 38.2 Fib replacement, Fibonacci retracement, right? So if I'm just going to delete this indicator, and I'm just going to look at it across the board, Euro Kiwi. Euro Kiwi has already retraced on the weekly time frame, all right, and it is just above this, Fibonacci level, just above this horizontal level over here. So I think the question to myself is, does it have any legs to go above? Is the large scale asset purchase reduction able to push the amount to fill up this kind of empty space above here? Now I'm going to look down further on the daily time frame. Okay, on the daily time frame, I think the daily time frame you can see as well. We have that higher highs, higher lows coming. And although fundamentally I would rather much short the euro against the Kiwi, I don't think it's time yet. So a little bit of patience will probably be needed, and I will probably wait and see where price is going, whether or not the technicals kind of allow me to follow my fundamental bias. Will this move be part of a deeper retracement on the weekly time frame, for a move like this? So we're starting to look at the bigger picture, right? And fundamentals is all about the medium to long term, right? While I would very much love to short the Euro Kiwi, now might be a little bit premature. I think it's a bit of patience needed. You can see Euro Kiwi has come up quite a bit, all right, and is almost going to be testing, I think, the 1 point. If I give this a number, I'm just going to give it a psychological horizontal, psychological resistance in a sense. All right, let me just change the settings to, let's see. It looks like I'm just going to put 1.67 and see where that figure brings us, whether or not I get a nice neat bounce, or maybe 1.65, a nice round number, right? A nice round number for price to aim towards. All right, which kind of makes a bit more sense. So 1.65 actually makes a little bit more sense. I'm just going to take this one away then. All right, so price is just about touching the 1.65 on the weekly time frame. So I'm really interested to see whether it will break above this level, or will it start to make a slow move downwards to give way to the slightly healthier Kiwi in that sense. All right, but bearing in mind the room towards the downside, the resistance levels are pretty strong. There's not much room to hit down as well. We have this much of space over here to the next support level, and we might have a retest of this support level. But overall, on a bigger picture, I would really like to see whether or not the large-scale asset purchase halt, whether or not it's effective across most of the economies. Because if it is effective, then we should see a little bit more certainty coming back into the market. But I think that it's going to be a long wait. As long as the conflict is over there in the Russia Ukraine side, I think markets are going to continue being choppy. It probably doesn't help that the S&P has been selling off quite aggressively for the past week, especially. So I think we are starting to see beginnings of some kind of confirmation of a downtrend or a bearish trend in a lot of the equity markets. But again, I don't want to jump ahead of myself. I think well, it hasn't broken down this support levels here yet. We'll see whether or not the market rallies back over here, whether or not the governments this time around can react fast enough to support their respective economies. So I think we are at a very interesting week. Do be patient. Be patient with your entries, follow your technical strategies, follow your risk management, and you should be fine. All right, so that's all for me this week. I'm mainly looking at the Euro Kiwi for opportunities, and that's all. Thanks, and see you guys soon.
Fantastic.
Cheers.
Lexi, thank you very much indeed for that. And she, of course, looks at those fundamentals like a few others do. And I've got to say, given the interest rate movements at the moment, the disparity, if I can put it that way, between what happens to the interest rates. Normally, you would see a fairly positive reaction to an interest rate increase on that relevant currency. Not seeing that. I think if you go back and have a look at the last 3 or 4 interest rate rises, then maybe you got a little bit of a knee-jerk reaction in the first instance, and then thereafter, not so much. In fact, the opposite direction. Very, very interesting. And Francesco, thank you very, very much for your question about China. Look, this show is very much a case of a lot of these are recordings. Alexis came to us via recording today, as will Lloyd in the near future. Not a show for Q&A, to be fair. And we have lots of shows throughout the week that are able to be questioned and answered. In particular, one of those is called Trading Buddies. And it's my very, very good pleasure to introduce my trading buddy, who will be with me tomorrow, but he's also with me today. And it's a very, very warm welcome to Ash in Brighton over there in the UK. G'day, mate.
Hi, buddy. How's things with you?
Oh, look, couldn't be better. Top of the world,
Yeah.
How
I
about
hope
you?
so. Brilliant, mate. Yeah. It was the weather's now started to change. We had a little street wedding yesterday. Actually, one of my neighbours got married, and
We're going to say it wasn't you, was it?
went. It wasn't me. It wasn't me. No, but the rest of the street went and had a great night. So feeling positive as always. And trading obviously, which is what we're here for, is also going well. So can't grumble at the minute, mate.
Happy days, mate. What about the data? What's that showing?
Let's have a look. So there are some I suppose some signals that I think we should be looking at and aware of. Let me make sure I get the correct screen here. I think this is right. And I want to show you what I'm looking for with the COT data specifically. So I'm going to try and pick out a currency just to kind of give an indication of where that currency may well be going in relation and regards to COT data. So when we break this down, this is the pound. This is about the pound sterling. This top line.
Wow, I didn't have a good week last week, I've got to say.
No, it didn't, mate. No, it absolutely didn't. And there's further troubles for the pound. And this is why I think the pound is definitely on the short list. What we're trying to do before we start the week is try and get a list together for things that we think should be potentially long trades and things that we should potentially be thinking of short trades. Just like Lexi was just talking about, it's really putting the weakest against the strongest. Mm. And as you say, the pound didn't have a very good week. And considering they raised interest rates, I think on the face of it, that would suggest that we'd see some pound strength. But the statement afterwards was just so negative that you couldn't really make an argument for a strong economy going forward. and it maybe even the potential for the interest rate hikes to possibly be reversed or be slowed down in comparison to the others. And we saw a 25% rate hike from the United Kingdom and a 50% rate hike, sorry, a 0.5% rate hike in the United States, and that may well be the state of things to come as we kind of move forward.
Actually, before you get into the data, I did have one question, and I noticed just because I watched the local news today, only an hour or so ago, Sinn Féin won the Northern Ireland elections. Is that going to have any effect?
Yes, it will, and it's not so much just that Sinn Féin won the Northern Ireland elections. It's also the councils throughout the country were voted on as well, and the Conservatives lost a lot of seats. You know, they've got issues. You know, where we've got this leader in position right now, Boris Johnson. Things tend not to stick to him. He's like he's covered in oil, and things don't tend to stick to him. But well, yeah, but things could be changing. You know, we've started to see people vote with their feet when it comes down to the local elections, the council elections. The Conservatives lost a lot of seats. He's got this Partygate issue going on right now, where he threw a party during the COVID-19 lockdown, and there was DJs booked, and there was the champagne, and everything was flowing. And while telling other people not to go and visit, very, very sick grandparents and parents that were effectively on their last legs in hospital. So that hasn't really come back, well on Boris Johnson. He's got a while before the election, but when you see this in the council and you see what happened in Ireland, as you say, then there could well be a shift that he may not be able to stop. So we'll see. But that also could be affecting what's going on with the pound. The lack of certainty that the Conservatives that Boris Johnson's in the head of, it tends to be good for business. Labour tends not to be so good for business, and that could also affect what we see with the economy. Now, if
all right, I'll let you get on with it, mate.
Yeah, well, if we look at the data here, so this is the index. Now, this really sort of is a calculation between the commercial buying and selling with a little bit of weighted with a weighted aspect to it, and we can see that the commercials are more, they're on the long side, and as the pound comes down, as the price action comes down, what you will often see is the commercials starting to buy up almost as a protection against the flip in the opposite direction. Now that is likely to happen at some point, the flip in the opposite direction. And if we look down here, this is breaking down really what's going on with the buying and sell side. The blue line is the net between the buying and sell side. So let's just take that away for a second. And we can see there's quite a great deal of buying pressure with not much selling pressure. Now, what I want to see when I see that is the non-commercials effectively getting out the way to allow the commercials to influence the market. But if we come down to the non-commercials down here, lots of selling pressure and buying pressure coming down. So really what this is showing is that this market is in quite decent balance between the buying and selling on the commercials and non-commercial side. And if we were to flip to the price action, then we actually do see that the pound has come down quite far. And even though we could anticipate upside, at this stage, it's suggesting the trend is still intact. Sorry, this is the pound versus the CAD. Now, the reason I want to bring it up against the CAD is that because this suggests that there is some balance, and it suggests that the trend is still intact. The next thing I'd like to really sort of add to this, to see if I can add to the influence, is what's the seasonal pattern for the pound right now? And if we come over to the seasonal pattern for the pound, then what we see is the pound in May tends to do okay against the Kiwi. It tends to do okay against choppy against the yen. But when we come down against the CAD, remember I'm looking at the trend continuation here. I can see that during May, the pound tends to perform quite badly against the Canadian dollar. Now, if you listen to the statements after the Bank of England made their decision, it was pretty negative from Governor Bailey. And given what's going on with oil, that would lead again me towards something like the Canadian dollar, which, as a producer of oil to the market. So pound CAD looks like a short seasonally. Going back to the COT data, it looks like the COT data was suggesting that the pound could continue a trend. We come down to what's going on with the CAD. Commercials are cutting back the shorts a little bit. The non-commercials, okay, they're cutting back the longs a little bit here, but that looks, pretty much in balance as well. So not a great deal suggesting a turnaround in fortunes in the pound CAD. And then finally, we'll finish at the price action with the pound CAD. And yes, it's very, very low. If you look at this on a monthly chart, you can see that there's some support down here, but we're through this trend line here. You take these away and build these up. So we're through this trend line here, a close beneath that level. We're through the lower trend line down here. And we are also through this, through this closing low here as well. So that looks pretty negative. And the question really then comes in, okay, we might have a short bias, but where do we get in? Looking at this chart, it would not suggest that getting in here is too wise. What we'd want to see is some sort of retracement back to one of these levels, the trend line maybe. Looking at the daily kind of gives us this point of structure. That was the last point we saw some upside, this point of structure. So it does suggest that, somewhere between here and the monthly pivot would be pretty good. And that's 1.6, let's call it 1.61 and all the zeros, or the monthly pivot. That would look like a decent point to potentially look for some shorting with a pound. So just to summarize, mate, we're looking at a pound still looking weak, and maybe against the CAD, we could look for a trade in that area. If we're concerned about the geopolitical aspect, moving towards something like the yen or probably the Swissy would probably be better as well. So pound shorts right now, but picking the correct currency and the correct price is still going to be integral.
Yeah, look, it's a bit of a challenge at the moment. And I think what you said before about now is probably not the right time to sell, because we are at such an oversold position on, and that's true for a lot of currency pairs at the moment, in my humble opinion. We continue to look at those currency pairs and think, well, okay, it's their time to turn or to retrace or whatever the case may be. But the momentum is so strong in the opposite direction. It's very, very
This is it, mate. And do you know what? I mean, the market bias is, yes, about finding the correct trade, but it's also about saying, okay, fine, we may not have an opportunity to go short here with the pound CAD, but that also states that we don't have an opportunity to go long either, because the data is not suggesting the turnaround is about to happen. So even though we might start to see some moves higher, it would suggest it's probably more of a retracement and a continuation down rather than a turnaround in the actual trend. So looking at a pound CAD long would be too dangerous. And, we've got to be professional and say, okay, just because we're in a buy zone, it doesn't mean it's a buying opportunity. Data doesn't suggest it's a buying opportunity. It's still saying sell. So this is the time we sort of say, put it on the watch list, wait for it to give us the correct price action, and then we'll go on the short side still.
Yep. One of my acronyms, right? NLNS.
Yeah, know it well.
No longs, no shorts. I got it. Yeah. All right, mate. Look, have a good rest of Sunday, and hope you recuperate okay after last night's wedding. And we'll see you tomorrow, right?
See you soon. See you tomorrow, buddy. See you guys.
Happy days. All right, guys. Let's switch our attention now to the currency indexes, and we'll go and have a chat to Lloyd, who is he's ready to go. Let's see what he's got to say.
Hi, good afternoon, everyone. This is Lloyd speaking, and we'll go into currency index for today. Okay, let me share my screen. Yeah. Actually, nothing dramatic has changed from what I've analyzed from 1 month ago. Yeah. So the USD is still going strong, and all the other currencies still going weak. Yeah. So in lieu of that, let's have a look at the DXY. Yeah. So for the USD, I'm not so concerned that I mean, a lot of people might be holding the view that the USD might be in time for a correction of sorts. But until that happens, I'll still continue to be a dollar bull. Yeah, it's not as if the USD has not been in this region in the past. It did. So fundamentally, I'm just going to dabble a bit. Is that the world is still not very stable. So dollar is going to be continuing demand. Yeah. So as long I'm going to wait till Monday, Tuesday, and see if actually the dollar index breaks this level. Yeah. So one touch, two touch might be a triple top if it's going for a reversal. Otherwise, once it breaks this level, it is still going to continue to 110. Yeah, that's my view that it should continue strengthening. As for the rest of the currencies, you can see that for the Aussie index now, this is really interesting. For the Aussie index, price is very near the 70 level. Yeah, you can see that in the past, this has proved to be a very strong horizontal level. Yeah, if it breaks this, then like all the other currency else, once it breaks a strong level, it's just going to cascade down. Nothing is stopping it. Yeah, so pay a lot of attention to the Aussie. Yeah, it might start. It might continue its current downtrend. Yeah, but if it's break this, we can all join the bandwagon for another round of really good healthy profits. Swiss index mentioned the last time, it's just going to cascade. It did. It's still got a bit of a healthy space all the way to 100. Yeah, so we can actually continue to short Swiss. Pound index, same story as the Swiss. Yeah, it's going to near 120. I don't see any significant horizontal level. Against retracement of sorts or whichever, but in the short to mid term, I'll still expect to be weakening. Now the Euro index, this is interesting. Yeah, it's quite near to this horizontal level. Yeah, so it is not a significant one, just that price in the past it did bounce off this level. Yeah, so in this region. So just keep a lookout. I might just hold a bit back for the Euro index, but to shorting Euro, probably reduce my risk. But other than that, I don't really hold any views that it might change its direction. Yeah, especially given you can see last week, the week before it was a bearish candle. It really sold last week. Inside bar that forms also a test bar. Yeah. Anytime this happens, it does signify to me that the continuation will be strong. Yeah, in this case, continuation to the downside. Canadian index. This is any Canadian pair in the upcoming week. I'll be really keen to look at it. You can see that price has been in a range. I mean, huge range. Yeah, from July till last year, July till now. Yeah, so last week candle did signify that this does give a very strong indication that it might actually break this level, which is at 77. Once it does, I think it will. Especially you can see that this is a rather strong horizontal level. Once it breaks, I don't think anything will be stopping it all the way down to 70. Yeah, but of course I'm aware that the Canadian dollar is actually strongly correlated with oil, so there might be some fundamentals in play here. Now, I don't want to speculate that, but just from a pure technical side, once it breaks this level, I'll be a very keen Canadian dollar bear. Kiwi index, again, nothing in its way stopping it from traveling all the way to 60. And yen, as everybody has known, it is the weakest of the lot. Now, something worth interesting is that since again 2008, yen has not reached this region at all. Yeah, so that in reality that means there's I cannot draw any healthy horizontal level that supports it. Yeah, so while I will still be a yen bear, but a cautious yen. Yeah, because technically the currency index for yen is in an unknown region at this moment. So have fun with it. So as such, my view for the following month is that let's have a look at dollar CAD. Yeah. So against strong dollar, potentially really weak Canadian index. I'm just waiting for this to actually break this potential triple top. Once it does, we can retest or higher low, and I'll be happily jumping in. Yeah, again, we might be in we will be in an uncharted region, but don't fear this kind of uncharted region because it does represent tremendous profits if it really just go off. Dollar yen, again, another uncharted region, but really, as the saying goes, the longer the stronger, and this is a very, very long uptrend since, early this year. Yeah, so while the trend is still healthy and strong, why not just jump in and have fun? So again, my view is that once price actually breaks this previous high, break and retest, I'll be happy to jump in. Kiwi dollar. Kiwi is actually one of the weakest in the basket. In terms of currency, one of the weakest in the basket. Last week, seen some consolidation. Yeah, so I'm just waiting patiently for another strong move downside. I doubt it will actually break and retest because the break and retest from the past isn't really readily available. Yeah, I'm just waiting for some sort of lower high, and I'm happy to jump in. Now, the speculative pair on my part will be Aussie CAD. Yeah, so if you recall, Aussie is at for the Australian index is at a really potential low, and the Canadian index is at a potential breakout phase. Yeah, so coupled with that, that's why hence my view is that I'm waiting for the Aussie CAD to actually go either way. Yeah, I favor the upside because I'm really waiting for the Canadian index to break down and for the Aussie index to actually have a bounce off a significant horizontal level. Yeah, so that's why my favor is to the upside. But if it does break down, I'll still be happy to go short. Right, so these are the 4 pairs that I'll be keeping a lookout for the setup for the next 2 weeks or so. Right, hope you'll be able to continue banking in some good profits along the way. Have a good day ahead. Goodbye.
Thank you, Lloyd, and goodbye to you. We will catch up with you in a couple of weeks when you do it all again. With any luck at all, and I can't see my chart for some reason, I should be sharing my Australian dollar versus the US dollar chart. And this is typical of what I'm seeing at the moment with the strong momentum to the downside for the US dollar. Apparently you're not seeing my screen. That's not a good thing. Let me try that again. Hopefully now you can. And if that's the case, I am on my US dollar, well, sorry, Aussie dollar Australian, but Aussie dollar, US dollar, there you go. I can see the chart now coming up. The reason I believe, because I'm a technical instrument person, if you like, the reason I believe the US dollar in particular is, I won't say in trouble, this is certainly not in trouble, but I do believe it has to think about, or the market has to think about the level that it is sitting at. Lloyd was talking about this level, and I agree with 100% with him. If it breaks, there's an issue for whatever currency is trading against it, because it is at such a strong level and in such a skyrocket frame of mind. You know, it just wants to go and go and go. And of course, fundamentals are playing a massive part of that. But if we're talking technicals only, then I have got to say that I'm just waiting for a lower high on this to trade. And it won't be everything against it. Ash has just given us a very good case as to why the pound, for instance, wouldn't be a good trade. I believe that the Aussie and the CAD, unlike, well, Lloyd's going each way with the CAD, and I get that. I think it is an each way bet on currency pairs because they are at resistance or support, and they are overbought or oversold, whichever case you're looking at. But I believe that if the US dollar does look like slowing down at any stage, then a currency pair like Aussie dollar or dollar CAD would be of interest to me. So they'll be the two that I'm looking at as I look for the dollar to come off its highs. If it doesn't, it doesn't. But if it does, then I'll certainly be looking for lower highs on those charts, or in the case of US dollar CAD, a higher low. That's it for Sunday Market Update. We hope you've enjoyed it. Hope you've got something out of it. And we look forward to your company again next week. Of course, we kick off tomorrow, Ash and myself, with Trading Buddies at the usual time, which is 5 o'clock my time, 5 o'clock Australian Eastern Standard Time, whatever that is in your area of the woods, then love to have you on board for that. Those of you who are in Australia, and I don't think this is worldwide at this stage, and have had the absolute pleasure and honour of bearing children and are female, I wish you a happy Mother's Day, because that's exactly what it is in this part of the world. I hope you've had a wonderful day, and we look forward to catching you next week with another Sunday Market Update. Have a great week ahead. Bye-bye for now.